Hi everyone, it's Jason here, and today I'm just going to do a very quick example on prepayments. Now, if you're going to follow the masterclass, if you've been following it, then there will be sessions on accruals and prepayments later on during the year. And I know that some of you have watched the video that we uploaded yesterday with regard to accruals. So today I'm just going to record a very quick clip on prepayments and how they work. So really simple example. We've got 3 T accounts here. We've just got the familiar dead click table here, which I always have, and we've just got 3 notes here that relate to what I'm about to do. So we're just going to assume in this very simple example that our year end is the 31st of December 2016. So these 3 accounts here are going to go in the books up to 31st of December 2016. So we're going to say there's been an electricity bill which we've paid on the 15th of December 2016. So in our accounting year we've received an electricity bill. So we've paid it from the bank. The bank account is an asset and we're decreasing the bank account. Now just a really quick note here, which I always try to enforce when I'm talking about dead click, is you have to remember that dead click relates to when you increase an account. I think some people do get confused. They just think about dead click and they don't think whether they're increasing or decreasing the account, and it's very important, because if you're decreasing any of these accounts, the entry is going to be the opposite way. So you really have to remember that when we apply this dead click logic, we're increasing the account. And a good way to I suppose show you this is in what I'm about to do now. So the bank account is an asset, as we know. It's on the current asset on the balance sheet, and we're just about to decrease it because we're going to pay an electric bill. Now if we increase an asset, we'll see it's a debit, okay? But now we're decreasing an asset, so we have to go against dead click, if that makes sense. So increasing an asset is a debit, so we're decreasing an asset, so it's a credit. So we're paying our electricity bill, so I'm going to just say the electric company, and to make this easy I'm going to pay them £900. So we're going to credit the bank account with £900. But you'll see in note 3 here I've got the period covered is November 16 to January 17. So as previously stated, our year end is the 31st of December 2016. So this electric bill that we've just paid, although we've paid it in this accounting year, it covers 3 months, and one of those months is in the next accounting year, because it covers November 16, December 16 and January 17. But our year end is December 2016. So we can only put the values up to December 2016 in this year's accounts, because one of the months relates to January 17. So we are prepaying one of the months. January 17 does not fall in this accounting year, it falls in the next accounting year. So it's going to sit inside these records as a prepayment. So hopefully that makes sense. So we paid them £900. Let's just say we're paying it on a quarterly basis, so let's say it's £300 per month. So it's £300 for November 16, £300 for December 16 and £300 for January 17. But in the electricity account here for this year, we only can record November and December because that's what our books go up to. So we've credited the bank account with £900. So we're going to debit the electricity account. We're increasing the expense of electricity. So increase expense is a debit. So we move to the debit side and we just put the bank account in there because that's where we paid it from. But if you remember, only 2 of the months relate to this year. Okay, so if it's £300 per month, 2 of the month are £600. Okay, so let's just really run through that quickly again. We just paid a £900 bill to the electric company, but it relates to November, December and January. So in our electricity account for the 31st December 16, we only can record 2 of the months. So that means that we're prepaying January 17's electricity. Hopefully that makes sense to you. Now at the moment we've got a credit of 900, we've got a debit of 600, so that means we need another debit of 300 somewhere in the accounts, and that's where our prepayments account comes in. So we're going to go to the prepayments account. Now prepayments is an asset. We're increasing the amount of prepayments in our books. so it's increasing an asset, so it's a debit. So in there we're going to put electricity prepaid, and it's £300. So now our accounts balance perfectly. So we've paid the £900 bill. 2 of the months relate to this year, so we've charged the electricity account with £600. 1 of the months relates to next year, so we're going to prepay £300 in this year. So when we come to do our balance sheet for 31st of December 16, we're going to have a £300 balance on the prepayments account, which relates to electricity prepaid for next year's accounts. So quite a simple example, but hopefully that makes sense. And as I said, we will cover prepayments in a lot more of a detailed way later in the year.